Hey everybody, it's hwsteele, and today is August 27th, 2022, and this is the fourth video in a series of 5 videos I'm doing in the month of August 2022 concerning lines on the chart and how they can help you anticipate the future. Now in this particular video, I'm going to talk about the master candle method. And this is just a method that is pretty simple, but can help you anticipate when there might just be a reaction in the market, a consolidation, a retracement, something along those lines. And you'll see what I mean here in just a second. Now before we get started here, I want to let you know that I've been under the weather for the last few weeks, and so if my voice is a little bit crackly or more sour than normal, that's why. But let's go ahead and get started here. So this is the Dow Jones Industrial Average, and you'll notice it's a weekly chart right here. Now what I'm looking for is a big, long candle, something along the lines of this right here. It could also be something like this right here. Let me zoom in so we can see it better. These big candles here. What I'm looking for is a large difference in price from the bottom of the candle to the top of the candle. It doesn't matter how much of the candle is actually body and how much is wick. I'm just looking for that large range. So I'm going to use my retracement tool here, and you'll see that I have a bunch of different levels on my retracement tool. We're not really going to pay attention to those in this method. I'm just using my retracement tool to measure the length of this candle so I can compare it to this next candle right here, because I want to find the biggest candle, or the candle with the biggest difference from the bottom price to the top price. So I'm going to put this here, and then I'm going to compare it to this candle. Give me that, come on. There we go. Compare it to this next candle that happened just a couple weeks later, and we see that that candle is actually just a little bit bigger. So that's now our biggest candle of recent history on the weekly chart. On the weekly chart in the Dow Jones Industrial Average. And we can see that this is back in like February, March of 2020. And so that candle's bigger. Then a couple weeks later, we have another big candle. And so I'm going to measure that. And we see that this big candle is even bigger. So this third candle is our biggest candle on the weekly chart. I'm going to zoom back out here for quite some time. And just by quickly looking, I can see that there are no other candles here that have surpassed the price difference of this candle right here. So for the time being, this is our master candle right here. This is the one we're going to use. Now, if we were doing this in real time, I would have looked at this candle and said, okay, that's the biggest candle in recent history. And by recent history, I mean probably the last, on the weekly chart, probably 3-4 years, something along those lines. And I would have measured that and said, okay, there's our master candle. Then 2 weeks later, I would have said, oh, there's a new master candle. And then 2 weeks later again, I say, whoa, a new master candle again. And then there would be nothing for the last couple of years, really, where there's a new master candle. So that's the one we're going to be using. Now, all I'm going to be doing is taking this measured move right here that matches this candle, this single candle, the master candle, and I'm going to put it on lows that happen in the future. So the market moves up, the market moves down, and then starts to move up. And then this is where I place this right here. It's not perfect. That's a little bit better, but there we go. And we see that the market moved up, and then right when it hit this price level right here, it stopped, consolidated, and moved down 50% of this movement right there. If I move it back up, or not back up, but up to this point right here, we see that we got another move equal to that. We had a big reaction to it. So I can move it up here, and we see that this one, this lower bottom right here, doesn't really give us our reaction level. It happens along the lines of this higher bottom right there. We get a topping area around here. We have a reaction, much less significant reaction than these have been, but a reaction nonetheless. And if we move up here to this bottom, we find that we start to get reaction. We get to this slightly higher bottom right here, and we get a more accurate price level right there. for the top of the movement right there. So as you can see, when you have lows, and since we're using lows at this point, that are pretty much at the same level, you're probably going to get one that gives you the exact level that the market reacts off of, and another one that's going to be off by a little bit. Or maybe you get a double top or something along those lines. This method is just to give you kind of a heads up of where you might be looking in price to see some sort of a reaction. It's definitely not something that you would want to just use all by itself to make your forecasts with. It's definitely something you wouldn't want to use all by itself to, put a trading system around, but it's definitely a tool to use to help you anticipate where the price levels to really pay attention to on the markets might be. All right, if I move this up here, we see that the market never quite makes it to that high level, or to this price level right here. The high is below that. But if I start going off of highs, we see that the move down here stopped at our measured move from this master candle back here. We can see that if I move to this one right here, this high right here, and this high right here are pretty much the same level, not quite exactly the same, but pretty close. We see that all three of these right here are basically pointing to this level right here that we reacted off of. And then, there we go, come on. There we go. We see that we have not reacted off of this yet because we haven't gotten down to that price level. So for our future, we see that coming off of this bottom right here, we moved up this length in price movement and then reacted and have been moving down since then in the last week or so. But we can put our measured move right there and anticipate that we get something here or possibly a little bit lower off this one here in the future. So this is on the weekly chart of the Dow Jones Industrial Average. I'm going to go to the daily chart right here. I'm going to zoom out a little bit, and I'm going to look, and it looks like this candle right here is the one we can use. That's our master candle for the last few months at least. Let me drag this around. Yep, bigger than that, bigger than that, bigger than that, bigger than yesterday. All right, so that's our master candle that we're going to use on the daily chart. Now, once again, obviously, if I were doing this in real time, I would have a previous master candle that I'd be using, and then once this one printed, I go, whoa, wait a minute, we have a bigger, newer master candle right there. And also, if you have let's say you're using a master candle, especially in the daily chart, that's several years old, and you see something that prints that's close to it, but maybe a little bit smaller, you can start to test out this new, since it prints right then in that moment, that day, the new master candle. Even if it's a little bit smaller, if you're using something that's a couple years old on the daily chart or 5-6 years old on the weekly chart, something like that, you'll probably want to update your master candle, which one it is. Okay, so this guy prints here, so we get a high right here, and we measure it, and we get a low reaction off of that. We get this high right here, and we go right through it right there. But when we have this reaction right here, we find that using this low, it goes past that. So we see this master candle is not really working very well for us. And one thing you're going to notice about the master candle method of anticipating price levels is that you will find the smaller the time frame, the more likely it's going to be that you're going to have to multiply that master candle. And I'll show you what I mean here in a second. You're still going to get small retracement areas like this that fit this candle's price difference. But your larger moves are going to be longer than the master candles. So what we want to do is measure the master candle and double it. So I'm putting the 50% level right there. So the master candle measures from 1 to 50%. So this is 100% more. In other words, 2 times the master candle. So now this price amount is what we're going to be using. We see this top right here comes out to this low right here. If we use this low right here, we see that we come out very, very close to the top right there. If we use this top right here, we're getting very close to this reaction level right here. And this one, they're about the same right there. If we use this top right here, we're getting this reaction level right here. And again, we're not catching the exact extreme price, but these candles all have one thing in common. They have massive tails where it's showing an area of rejection. And let's look at this one right here. See how this top right here actually points to this area right here, this low. That means we had a top here. It didn't reach it, it didn't touch it. It moved up past that top, but that top still gives us information in the future, even though this price level was exceeded. And if we look at this low right here, we find that it gives us the top right there. This top is exceeded. In other words, if we measure from this top, we can see that this move down does exceed it right there, but it's kind of a special circumstance right there, considering the fact that it's a waterfall pattern. And of course, that just means price fell off a cliff right there, essentially. So if anywhere there was going to be enough volatility to push past this, it would definitely be right there. Measure the bottom right here. We get a small reaction right there. Measure this bottom right here and this bottom right here, kind of being the same price level. We see that we get this consolidation zone, market stops. It doesn't really retrace very well right here, meaning a whole lot. It doesn't come back very deeply, but it does stop and consolidate there for a week, week and a half, something like that. And of course, we have a low right here, which we top the market off right there. And then we have been moving down right here, so we can anticipate the possibility of this level, or maybe more so, this level right here being important and possibly stopping the market. So the master candle method is definitely not a just absolutely massively incredible thing. It's not something you'd want to develop a trading system off of just this, but it is a tool to use to help you anticipate price levels that could very well be important to you. And like I pointed out earlier in the video, the shorter the time frame, the tendency to need to multiply the actual price difference of the master candle, it increases. You'll have to test it on your market, on your time frame, that kind of thing. But you're going to find that I'll say in many cases, it's actually pretty helpful. So hopefully you find this interesting and a little tool to play with for anticipating price levels in the market. And I will talk to you in the next video.